What a great audience.
Okay.
Right, what's going on? This is the first stream of Obe TA. My name is Ryan O'Brien. I am aware that it rhymes. I've had it 27 years of my life. If you make fun of it, you will be banned immediately. I'm just kidding. But yeah, man, this is Obe TA. This is my attempt to get on here and try and show a little bit of what I know, try and teach a little technical analysis here. You know, you'll see Bitcoin live, that's kind of for the algorithm, but really, we'll talk about anything that has a chart here. And I wanted to get on here just because I know that investing, trading, everything like that has gotten a lot more popular over the years. I think that's due to things like Robinhood, stuff like that. But if you're anything like I was back in the day, I would just kind of find a video and I would listen to the guy and he would say whether or not to get in on an asset, and I would kind of just follow his advice without really looking at anything. It was just kind of a number on a screen. So yeah, I wanted to get on here. I'm really not the type of like live stream guy, but it sounded like fun. I thought I had something I could maybe share that would be beneficial and meet some like-minded people, right? And if not, you just here for the picks and whatever, that's cool too. All right, but yeah, here's an attempt at it, right? So what is technical analysis really? It's kind of just the study of the charts here. A chart being just the psychology of a market, right? Of the markets of any given asset. It just lets you know what an asset is doing kind of at any given time. There are a lot of different indicators that go into it to let you know what direction it might go in. And you can use a lot of historical points to kind of plot out where you could expect to see price action happen, right? Now, I want to say this up front as well. This is not a foolproof thing, right? This is not 100% accurate. This is not going to win you lots of money every single time. You need to be smart about this kind of stuff. The general rule of thumb is to keep it about 2 to 5% of your total portfolio in any one given trade, okay? Use it how you will, but I'll fit it. This is also not financial advice. This is my opinion. These are just techniques that have been taught over the decades that people much smarter than I am have been using for a long time, and luckily have put out in the world to be studied. So hopefully I can interpret them in a way that makes sense. But yeah, with that being said, let's go ahead and kind of dive into an asset. All right, so I guess first here, we have Bitcoin, right? Big Daddy Bitcoin, the macro of the crypto world. Okay, so Bitcoin really, since it's still leading the markets, you always kind of want to wait for a little bit of an edge on Bitcoin, at least going sideways or up before taking a position on the altcoins, S coins, whatever you want to call them. So let's take a look at Bitcoin here. All right, and let me go ahead because I already had some up here. I'm going to remove the drawings so that we can get a real kind of raw idea of how to go into this stuff. So I'm going to go ahead and just start plotting how I normally do. Seizure-inducing logo, Robert Maloney. I don't know who you are, dude, but that's not very nice to say. All right.
Right.
So why don't you keep your opinions to yourself? All right. So let's take a look at Bitcoin here. Okay. The way that I always start off is by plotting lines of historical resistance and support. So the way that you can tell, and we're going to start off on the daily chart here, what are historical resistance and support. So this is my first step every single time. And if you go, I have a video on my YouTube channel. It's called Making a Sandwich, whatever. That'll kind of lay out the steps that I take just to familiarize yourself with them. But let's just dive into it. All right, let's take a look at Bitcoin. So if we go ahead, we're going to plot this one right here as a point of resistance. And the reason being is that you're going to notice these discernible kind of peaks and valleys, right? So when you see these tips and these bottoms, these valleys, these dramatic ones, that's where you can go ahead and it makes sense to put a line there as resistance, right? Because here on January 8th, it sold off and was resistance. And the way that these work typically is that on the way up, you'll find price resistance. People will be selling at these levels, right? And if you break through them, it's called a breakout. We'll kind of get into that. But so I'll set my first one here. All right. From there, again, just go to the peaks and valleys. Another one here. Another one up top. And so on and so forth. Okay. All right. So now that we have the lines kind of drawn out, we can fast forward a little bit to where we currently are. All right. Right over here. And what you'll notice is that the lines will cross all the way through and touch different points along the chart. All right. One of them being right here. Right. One of them being up here. And when you have it touching multiple spots, you could even regard this point here. It didn't quite reach it, but it would still be considered resistance, right? It was still technically unable to reach that previous high. I like to go ahead and just throw a little range here. Okay.
Right.
All right. So what this means basically is because of this valley and this peak right here, these points, these prices right over here, 43,157, 42,101, will act as a point of support if you're above it. And if you're below it, it'll act as resistance, right? So you're above it currently. If you were to come back down and test it, that should hold up as a strong point of support. All right. So what has Bitcoin done recently that matters, right? That's important. Well, so currently at $48,843. Nick says America. You know what, dude? I got something for you.
I thought this was America. Huh? Isn't this America?
Right, so
I thought this was America.
You're at $48,844. Currently, you'll notice right here from September 18th, right before you sold off, had this little dump. You're sitting right at it, and you've attempted to get above it a few times. And maybe I should actually break down here first, kind of for the newbies in here. Not you, Nick, dude. I know you're a seasoned vet, but the candles here. So what they mean is that the bottom, when you're looking at green candles, the bottom of the body, let's look at one that's already formed, is where the candle opens at, right? It's the price that it opens. So 47,000, it'll say it up top, 47,633. And then if it closes above that price, that will form the real body of the candle, right? As you can see, it closed at 48,233. Now, the wicks are the highest and lowest point that price got during that day, right? But didn't close at. So what you'll see is that it got as high as, right, 49,322. It got as low as 47,082, but ultimately closed here right around 481, whatever. So what you're seeing right now, if you kind of keep that in mind, and you'll notice that where the wicks go is where price attempted to go before selling off, right? That's as high as it got before sellers came in and pushed it back down. So you'll kind of notice at times at certain levels, you'll see it kind of just battling certain lines, trying to get above it, but it just can't, right? And you'll see when it gets rejected at points like that of support and resistance, whatever, those are called confirmations that lets you know that there were not enough buyers at that given time to get it up over where it needs to go. So right now you need to get over 48,763, okay? And you're attempting to do it. You were above it for a little bit today, and this will close in about 1 hour and 7 minutes. But for the time being, you're still just struggling to get above. And, this down here, I feel like I'm just dumping knowledge on people right now, but this is going to be, these are what are called the oscillators, right? So the MACD here, moving average convergent divergence, okay, is going to be a measurement of momentum for the asset, right? So the green being positive, and you can see even when the red starts to turn a lighter red, that means buyers are coming in, they're buying the asset, it's moving it up. Momentum is starting to swing towards buying activity, right? As you can see, a little green candle, small amounts of buying, and on it goes. The relative strength index also measures momentum. It also measures when things are overbought or oversold. So anything over 75, you'll notice right here, these dotted lines, anything that goes over 75 is considered overbought, okay? Anything that goes below 25 down here is considered, anything below 30 is going to be considered oversold. So when they start getting down into the oversold areas, oftentimes you'll see a reversal towards the upside for wherever it is, right, to get it back towards the middle. Likewise, if it gets overbought, it'll start to go back down, due to it being overbought. And the fact of the matter is that when it starts getting up at these levels, and this is where this stuff helps out when knowing when to get in, when not to get in. If it's up at 90, right, it doesn't make sense to buy the asset because it's overbought, right? There's a higher probability that it will sell off and go back down. And if you buy it at that level, you'll start off at a loss, okay? So the name of the game here is to buy at levels like this and to understand why, and not to buy at levels up here and to understand why, right? So as far as Bitcoin is concerned, what we can do here, because we don't see too much on the daily, move it over to the 4 hour, and let's take a look down here. So what we want to find here is divergence. That's where these oscillators come into play. So divergence is essentially when price is moving in a different direction than the oscillators, right? So what you'll notice here, I'm just going to draw this out. Notice how there's a slant to that line, but notice where the price is at those bars, okay? It's going up. So you've got price going up, and you always want to go off of the candle bodies, but momentum is going down. So that means there was more selling occurring here than there was back here, but price still hasn't gotten to that level. And as long as price stays above this low back here from September 29th and starts to pivot and rally towards the upside, you'll have what's called hidden bullish divergence. Okay, so there's hidden bullish divergence, which is a continuation. It is a continuation symbol. Okay, all right. So that signals that the price will continue to go up. In this case, if it's bullish, right? And if you have bearish, it's just the inverse, the opposite of that, and it would signal that you're going to go down. Okay, so and this is a ton of information all at once. It will become second nature in time. It does require practice, but once you can identify this kind of stuff, it will really help you at buying at high value areas and not getting dumped on at high points like this. All right, so what is this telling me about Bitcoin? The 4-hour is showing hidden bullish divergence, right? It is bounced off of what was, critical support from these points. So that 4-hour divergence should bleed into the daily and push it up above this little shoulder that we needed to get above, all right? And if we can close the daily above that, that'll be a strong indication that we're going up to 53, right? We're going to test 50 first because numbers that end in 0 and 5, this is an important lesson to hear here. There are things called psychological numbers. It is not important to calculate the slope of the line, Rob, and I would ask you not to interrupt. All right? So 50,000 is going to be a major point of resistance. All right, and again, the reason being is that numbers that end in 0 and 5 typically are going to do that, right? So like 45,000, 50,000, 55, 60, those numbers, 50 especially though. And the reason is that people kind of just subconsciously will, they like those numbers because they're clean, right? Nobody wants to put in a sell order at $50,236.04, right? So they're going to have their orders already set at 50,000 to take some profits. And that's why you'll see, especially at levels of resistance as well, you'll start to see price struggle, right? Because people already have their orders there. They're just waiting, right? So 50,000 really is the mark here to get above. You're trying to get over the shoulder. If you can't get over the shoulder, let me go back to the daily here. Yeah, if you can't get over this little hump here, realistically, you're going back down to 43,000. All right. So this is a very important area to close above. You are trying, again, that 4-hour is helping you. Should go in and should get it above there. You've got an hour before the candle close happens. Let's see if it can get there by then. If it can't close above at the end of that hour, just watch, be careful. You might start to see this sell off a little bit. That might be confirmation that it's going back down. All right. Says Bitcoin. All right. How was that? Need a drink, dude. Rob, what did you learn? Tell me what you learned.
It's all over now.
What's Dogecoin doing? Well, we can definitely take a look. Taylor, thank you for the request. All right, we got Doge right here. Let me go ahead, clean this guy up. Now, Doge is not really one that I am a total advocate for, and the reason being is that back in 2017 when this thing came out, it was really created as a joke, right? It was created to make fun of crypto, and whereas you could say, if you ask certain people, they would be like, oh, well, it's going to be the future currency. People are going to be buying, Teslas and Doge, whatever. And forget that at the time, it was literally made as a joke to mock crypto, where, Bitcoin was created to try and solve real world financial problems as far as the collapse of the real estate market, blah, 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 right? Satoshi Nakamoto came in and created this to try and decentralize people's finances from, government, institutions, whatever. Now, does it have its own problems? Yes, of course it does. But the reason the reason we're looking at Doge here is because, like anything else, it is an asset. It is actually a popular asset. Maybe just because the meme's funny, whatever the case is. But oh, Rob, we got some pumpkin smash beer going on. Okay. That's what's in the cup here. And I'm trying to keep it fancy for you guys. I don't want to do bottles. Taylor, why not what? What are you asking why not to? Okay. Well, we're just going to keep it moving then. So, Doge here. As I said, not a huge fan of Doge fundamentally, but technically it actually looks really good. And I'll kind of explain why. Let me first clear this little mess up. Alright, so why does Doge look good here? Can anybody tell me? Rob? Okay. I'm just going to answer your question and get no interaction. Alright, dude. Okay! That's totally fine. Alright. So why does Doge look good here? Well, as we always do, we're going to go back. We're going to put in our support lines. Okay? And anywhere you see one, just throw it in. Hold up, let me shrink this down a bit. Okay, so we are on the daily for Doge, right? And it's currently at 24 cents. Okay, so what I'm seeing here with Doge, and this is going to be kind of another different tool that is used in a lot of, I don't know what you're asking why not to, Taylor, so I'm just gonna keep it moving. So the reason that Doge is good at this level, there is a tool in technical analysis called Fibonacci. Okay, now Fibonacci was founded by Leonardo Fibonacci, total Renaissance name, right? You probably knew Da Vinci or whatever. But there are numbers in nature that happen naturally and very often, right? One of them being the 1618. It's called the golden mean ratio. The reason it's regarded so highly is because, again, you see it in nature a lot. So you'll see it like with flowers, in the patterns and everything. And if you divide certain lines by others, very often it comes out to 1618. He said something where it's like if you measure your arm and then divide it by the length of like your hip to your foot or something, it comes out to 1618 for everybody. So it's just they're just naturally occurring numbers that in patterns, right, which is what these are patterns, happen. So with that being said, there you could do the same thing, and this is what's called Fibonacci retracement. So what you'll notice here, and you always want to do it from low to highs, right? So you'll start off at the low here and you'll bring it up to the high, and you'll notice this 236, this 382, this, the 50% is not really Fibonacci. That's more like Charles Dow, but just ignore that for now. The 618, right, and then the 786, the 886 are what are considered deep value areas, right? So when it goes beyond the 618 is when you start getting to these deep value areas. It's also where you start to see harmonic patterns. Okay.
Right.
So we'll get into that stuff. I understand, what the hell is a harmonic pattern. Everybody in here, like the flag might have to go, dude. What are you, a communist, bro? Tanner, what are you doing in here, man? I'm glad you're here, dude. Even if you're being a communist, it's alright. So yeah, Fibonacci here. What is it? Low to high, you always want to go left to right. All right. What you'll start seeing is this 236, this 382, this 50% retrace. These are all percentages, right? So from the low to the high, as the asset starts to fall in price, these will be the levels that's falling. So at 47 cents from the high, it's down 38.2%, right? Now, don't ask me how these numbers were chosen. These are just numbers that are highly regarded in technical analysis as being areas of reversal. And the entire zone from 382 to the 618 is what's called the golden zone. So that's where you'll see a lot of retracements happen in this zone. Okay. Now, what do we have going on here with Doge, and why do I like it so much? So what you'll notice, and let me kind of just clean this up, it makes it a little bit muddy, but yeah, Nick, dude, Ethereum's great, man, and we'll get to that as soon as we're done here. So with Doge, notice there where this line of support is, right? Notice how this candle on April 23rd came down, touched it ever so tenderly, right? Before springing up, doing its thing. Notice how it came back down again, touched it ever so tenderly, came down, touched it again, right? For the third time, it has regarded this point here as support. All right, so that's a pretty strong area of support. So I'm gonna go ahead, and if I'm looking at this, I'm gonna throw the Fibonacci on there from the low to the high, always left to right, right? And what am I seeing? Well, one, it's at that area of support, but notice which line this asset's bouncing around at, okay? It's bouncing around between the support and the 786, okay? So it started bouncing off the 786 August 7th, sprung up, came back, tested it again on September 29th, and confirmed it, all right? So it confirmed the 786 deep value retracement areas right around areas of support as support once again, right? This time you had what's called Class A Bullish Divergence, all right? So Class A Bullish Divergence is when the oscillator, and you have it ever so slightly on the RSI, is when the oscillator is making a higher low, but price is making a lower low, okay? So price is selling off, but the negative momentum is going down, right? So they're going in inverse of each other. This is making higher lows on the oscillator. The price is making lower lows, right? And you can see it's slight on the RSI here, but you do have it right here as well, okay? Higher low, which means that seller exhaustion is happening. And you've actually had a reversal at this point after the back test, confirming this, that Class A bullish divergence. So you're going to come up here, you're going to test this area right here. It's going to be pretty strong. Reason being, you've got the 200-day moving average moving up here. It's going to basically cross over 26 cents, right? 26.43 cents. So with this playing out, if you expect it to continue going, which seems kind of likely at this point, that is the next level of resistance to get to. I think it's pretty likely that it gets there, and if you can break through it, I mean, next stop up to this prior resistance here at 35.16. Now, it's not the only thing here with Doge, and I'm just going to do this real quick. Nick, I know you're just dying to see Ethereum, but I'll show you an example of a harmonic pattern, right? So harmonic patterns are just an extension of Fibonacci, and they are essentially natural patterns that occur on a chart. And typically they'll show up as either an M, as in Mary, or W as in like Wilbert, right? So you would basically take it from where you plotted the fib, take it to the top. All right, you come down, go up to the next peak, right? So you go down to the valley, up to the next top, and then bring it over to wherever your price is. Okay. We could even move C. Let's move this over to the 4 hour real quick. All right. So while this is not the prettiest harmonic, it's not super formal, it is coming down here, the 786. It is forming somewhat of an M shape, right? So that would play out. That does just add another variable to the mix of being near the what's called the pattern completion zone of D, which is what D is, right? It's just the final point of the harmonic. You know, you've got a few variables lining up with Doge here, and you know, it looks like it just actually broke above the 200-day moving average for the first time since September 7th, right? So you are above that. If you can close above that, you've got about 49 minutes to close above that. It's a good sign, man. You haven't closed above that since, like I said, back here on September 7th. So you can do that, play out the hidden bullish divergence, all that stuff. Should see more upside. So Doge actually looks kind of good, and with what this thing has done before, just being nutty, yeah, I could definitely see this thing making a move at least up to 31 cents, right? Yeah, so that is Doge. Okay. All right, so Nick, what do we want to look at? Ethereum. All right, dude. Let's clean this thing up. Let's do it right. So what do we always do? Let's plot it out. What's risky? Rob, what are you talking about? You talking about Dogecoin? Pretty sure Doge is like the most solid investment in existence. This is not financial advice. It's actually not. It's not my real opinion there. All right. But, okay, Nick, here you go, dude. Let's take a look at Ethereum. Plot these lines out here, all right? The all-time high, always going to act as resistance on the way back up, okay? And then again, just look for the peaks, baby. Look for the peaks. And they could be close together, right? That almost just makes it even stronger. You have kind of a zone going on at those levels, okay? Okay, so we have our support and resistance lines plotted out. So let's go ahead, move up a little, see what Ethereum is doing here, okay? Now, again, always look at your support lines, all right? Notice how price is right at, right? Got above it a little bit, right at it, trying to hang on to it. You're also right at the 200-day moving average, which should act as a support going forward. So right now, I don't see too much on the oscillator as far as moving it up, or at least any hidden bullish divergence or anything like that to signal continuation. We'll take a look at the 4-hour to see if that will move it in and help it. But you're really just trying to stay above this prior resistance. And if you can't do that, if you do close here above this point back from August 23rd, I mean, there's really not too much else. I mean, you might honestly be heading back down towards 3,100. Okay, so, you know, we got 46 minutes until this thing closes. You really want it to close above there. All right. So there is one other thing here. Let me go ahead and take a look at I'm going to Fibonacci this real quick. Yeah, all right, so I'm going to show you something real quick called an ABCD pattern, okay? Now, the way that this works, this is another structure, right? Similar to a harmonic, but not really. It's kind of just its own thing. What has been observed is that when an asset runs up, as it has here, and sells off 61.8%, remember that's a Fibonacci extension, right? It's the golden mean ratio of all things in nature, whatever. Sold off to the 618. If it then rallies back up towards the 1272, that would be what is called a bearish ABCD. Okay. Now, doesn't mean that that's going to happen. That's just kind of a thought as to where this asset could be going, right? You would kind of want to see that because you want to see it get over this prior peak, this one too. Really, if you can close above this level, next stop is 3,662. All right, which like a gain of 7.86 from there. This prior peak, 19%, right, up to, I guess that's the all-time high, right, at about 29%, right? So what we want to do here, and I'm just going to show you real quick, I wouldn't personally take this trade yet, and the reason is you're currently like in a battle, right? So you're trying to close above this, and if you can and start to confirm kind of a switch to the upside, I would feel better about it. But this is kind of going to be a staple of how I set my trade setups, what I need to take the trade. And this is not necessarily for Ethereum, but this is just, as I said, an example of what you want to do, where to maybe place a stop. A stop loss is essentially a price that you put on a chart or wherever you're buying the asset, where if the price falls below, right, falls down here and falls below your stop price, let's say you have it at 3,267. If you do a stop, as soon as it gets to 3,267, it will put in a market order for you, right? So it will sell it for whatever the best price the market will give you is, but ultimately it will sell it and it'll stop you from going like this, right, and just losing all your money. So it's definitely something you want to use on every single trade that you do, because for one, it just kind of puts your mind at ease. I think that's the most beneficial thing about it. You don't have to sit there and worry that your money is just gonna, disappear, or, whatever the case is. But it also just lets you go on with the plan, right? You know exactly how much you're risking to lose and how much you're risking to win, right? And this guy Mark Douglas has a book. It's called Trading in the Zone, and it talks a lot about like the psychology aspect of things, right? Because there's a lot of people out there that know how to do technical analysis and still don't make money because like half of this thing, maybe even more, is like psychological, right? And if you don't implement your strategy every time and with the same kind of parameters, and you just Wall Street bet YOLO your money in there, you have 10 grand, you throw 5,000 on one investment, and it gets destroyed. Half of your portfolio is gone. And it might not seem like it at the time, but it psychologically kind of will give you a different opinion on trading and investing and whatever. God damn, this song is good. Hype. All right. Is everybody still in here? Is anybody still in here? What do we got? Still 5 people. Everyone's just listening in the background. That's cool. I get it. This stuff will come, and all of you, all my friends in here, you will all become master traders, and we're gonna get very wealthy. Maybe. I don't know. We'll see. All right. Loving the engagement. All right, let's see what we got going on here. So, again, with Ethereum, if it follows this wave up, right, and gets to the 1272, that would be a good area to start looking to take some profits. It's also right at the previous all-time high, so that would definitely be a strong reversal point to look for Ethereum. But, as I was saying, this little green box. So, what this will do, and I recommend everybody, what's up, guys? What's up, Nova? How you doing? I recommend that everybody, if you actually want to try and learn the stuff and look at some charts yourself or whatever, I'm using, it's called TradingView, and you can go on there, it's totally free. Go to the chart section, you can type in whatever ticker you want, make a little watch list or whatever, and kind of do it yourself. I have a Discord channel, which I guess I should post in here. Dang, I guess this light's gotten kind of bright on me.
Quit playing with your dinghy.
But yeah, anyway, so I'll make my rounds and make sure you guys have a Discord, join in there. It's really just kind of a platform you can go and just talk different categories in there, but I have a lot of educational stuff in there, like the harmonic patterns, what they are, what they're called, what they mean, different candle, closes, what candles are. I have my exact trading view set up, right, so you can have it look exactly like mine. But yeah, so I'll go ahead. Let me see if I can get that link in here. I think I can. Sign into chat. What the hell? All right, can't do it now. Okay, so this is good. All right, this is kind of like a test. This is kind of like a test stream. I'm trying to see what goes right, what goes wrong here, so that I can fix it and be ready next time. Okay. Okay, so let me kind of just get back here to what I was talking about with this box. Right, what is this? So the green is essentially your target, right? This is a tool you can use to target prices that you want to take profits at. You should always do that after a certain amount of time. Typically, you should have 3 targets. A rule of thumb with this, if you're trying to figure out how much to take out, or whatever the case is, every time you hit a target, typically you take like 33%, right? You just take it out in thirds. That's a good way to go about doing it. But what you want to see here, and I'm going to start getting into some gambling or whatever. See some memes. I don't know what you're talking about, man.
I love gold!
Like that? Is that what you're talking about? I'll figure this stuff out. I will.
Okay.
I'm a little bit nervous, maybe, right? I feel like I'm talking a little bit too much. Am I talking too much? Somebody let me know if I'm talking just way too much.
Right.
I knew it. I thank you. I knew that you would be honest with me. I appreciate that. All right. So let me try and slow it down here. Okay? Slow it down. Nick, I don't trust you, dude. I don't trust a word out of your damn mouth. Anything you say, honestly, I'll probably do the opposite. All right.
Yes!
So let me get back to this goddamn green box. All right. This is for targeting. Let me explain what this means. Okay. Risk to reward ratio. I don't know if you can really see that. Let me try and zoom in a little here. Risk to reward ratio. See how it says 4.14? That means that for every dollar that I bet, because that's what this is, right? This is just trying to increase probabilities, okay? As I noticed before, Mark Douglas, who wrote Trading in the Zone, he talks a lot about thinking like a casino, right? You know what, Nick? You're right, dude. I'm sorry about that. I apologize. Make sure you hit that like button, that bell, that sub, right, dude? All right. So, 4-1. Here's what you want. You want at least 3-1 odds, because that means that you only need to win 1 out of 3 trades, right? Let's say you have $1,000 to invest on the assets. If you have 3-1 odds, even if you lose 2 of them, just winning the one, let's say it's up 30%, you will have netted $500, right? So we want this to be at least 3. So we can move the stop down, and that's what it'll do. It'll allow you to move your stop down to a price that gets you 3-1 odds, right? And you want to move it, I mean, at this point, because you're going to be trying to get over 3,484, you're probably going to set your first target like right here. Okay, now notice how your risk to reward went down to like 0.86. That's absolute trash. So you're going to move it right below, usually, historical support and resistance, right? Because if you break that support, you're most likely going low. So you want to sell it before it sells off and goes way too low. So when you set up your targets, look for the peaks, look for where the resistance is, where you're looking to take profit, and then size up the stop. If it makes sense to put it there, and you're not just making up lines, then you should take the trade. And the thought process is there. Yeah, Taylor, do you like that? This is all copyright free, by the way, which I need to learn how to get some copyrighted music on here because it's just better, right?
Okay.
So the 3-to-1 reward ratio, if it sells off, you lose, and this is just a random example. This is not real, right? This is just to show you this box. If it were to sell off, see the stop right here, has your price of where it's set, you would lose 1.15% of your position, okay? Now, let's say we're targeting it all the way up here. You stand to gain 7. I know, Tanner, this isn't making you excited. I know you're trying to make that money, dude. But the honest truth about this kind of stuff is that if you're doing it right, it can actually be kind of boring, right? Because you're not throwing down $10,000 on Dogecoin. You're not throwing, $5,000 on whatever, an expectation of it quadrupling in a month, right? That's just not the way you want to do this kind of stuff. In crypto, if you spot these bottoms and you see the divergence at historical support, all that stuff, right, at a pattern completion zone, they can go nutty, right? And your targets can just get obliterated in a good way. So that's what you want to start looking for. But most importantly, right, because without this stuff, you're looking at like Robinhood or whatever you're looking at that you have your assets on. And, oh my God. Yeah. You're just looking at a number, right? So you could be looking right here, it's $4,195, and you have no idea that, there's exhaustion going on, that there's, bearish divergence happening, that it's overbought on the RSI. You threw 20K on Doge this morning, surprise. Okay, well, you actually put it in at a high value area, right? You put it in at a good time. Now, I'm going to assume you've got $1 million stashed away somewhere, right? 2 to 5% of your overall portfolio, but hey, man, it's better than buying it the night before Saturday Night Live, right? Nice. Oh, God, I'm still getting the hang of this thing here. Hold on a sec. Hold on. There it is.
Nice.
I don't know if you could hear that, but cool. Well, hopefully tomorrow you don't just get absolutely destroyed and lose your $20,000 because I'm not paying for the mortgage this month.
And it's gone.
By myself, that's for damn sure. But yeah, so you could even, if you want, to try and forego this this resistance up here. If your target really is that 1272 and you want to just have your stop there, you could go for that. That's fine. The chances are less because you've got this resistance up ahead. But if you break this, honestly, if you break above 3,663 on Ethereum, I mean, you're going back up to you're going back up to 4,000. All right. You break that all-time high, 1272, and then from there, you could just kind of, Fibonacci, but we'll do that another time. All right. But yeah. So, and again, just to kind of put it in terms, maybe you can understand as far as that risk to reward and thinking like a casino. So, does anybody in here play blackjack? I know for a fact that some of you do because I've literally sat at a table with you, right? But in blackjack, it's regarded as having the best odds for the player, right?
Right.
So the house or the casino actually has like a 1% edge. But the reason that they make so much money on it is because they play every single hand, no matter what, right? And at the end of the year or the month or whatever the time frame is, they end up with a profit. So if there's $2 million in games played, they may have, lost 900,000, but they made 1.1 million, right? So then net that out, they profited 200 grand at the end of the day, right at the end of the year, whatever. They play the long game, and that's really kind of how you got to do this stuff. You can get lucky, and these things can go nuts, and you can feel like a genius, and that's all good. It's fine, dude. If you're making money, that's awesome. But be very careful about getting into the mindset that because maybe you have 2 or 3 of those happen, that you can predict the next one, right? Kind of like blackjack, except we're trying to have much better odds than 1% over the market, right? So even if we end up with 60%, okay, and we're winning 6 out of 10, yeah, we might lose 4 out of 10, but at the end of the day, as long as we keep playing our odds here, we gonna make some money, okay? Pull out that money printer. All right. So yeah, so that's Ethereum. All right. Anybody got anything else? I know that the S&P 500 and the market kind of overall is looking a little bit shaky, looking like it's ready to dump. But we can take a look at it, right? Actually, how far off are we? We got 30 minutes till the candle close. Good lord. All right, let's see here. What do I want to look at? Let's look at the S&P. All right, the S&P 500. So what happened? All right, and this is actually a good example of a structure. All right, we haven't talked about that yet. Candlestick patterns. All right.
Hello there.
So let's take a look at what was going on with the S&P 500. The S&P 500 is the top 500 companies in America. S&P, that's right, dude. S&P, show it some damn respect. All right.
Not right.
So the S&P 500, top 500 by market cap companies in the U.S. We're talking your Apples and your Microsofts being at the top, right? But it's the top 500, and this generally gives an overall reading on the health of the U.S. economy, right? Because those companies make up, a vast majority of the market share of the economy, honestly. So when it starts to sell off, right, that's kind of implying that the top 500 companies are not doing so hot. Too bad Apple sucks. What are you, a Dell guy? What are you, Windows? Windows is actually pretty awesome. I had to recently get rid of a Mac because the Mac OS sucked. So I'm on your side with that, actually. Go ahead, I'll give you a clap for that. Coming to to Apple sucking, right? All right, so what are we looking at here? All right, this is the S&P 500, and as you'll see, the COVID crash back here in March of 2020, right? This is what's called a black swan event, which is basically just anything can happen, really, right? They can come out and Russia could be sending off a nuke to us. I'm sure the markets might react a little bit to that, but the COVID crash, right? And it did crash. And it actually went down, it's like 38%, 35% in 24 days, right? Which might not sound like a lot, but the S&P 500 usually consists of most people's retirement portfolios, stuff like that. So you have to think, for all these people that spent their entire lives, right, investing in the S&P 500, doing what they were told to do, and now they're like 75 years old, right? Let's say they built up $1 million. Down 35% in 22 days, so less than a month, they've lost $350,000. And they've been building that up their entire life, right? So they're down $350,000. Okay? Ugh. That's horrible. All right? It doesn't seem like a lot just looking at a number, but that's bad. Okay? Now, subsequently, we've been on such a ridiculous run since then that in the course of 365 days, like literally a year, it's up 106%. Dude, if you made a perfect trade, right, and bought it at the bottom, 106% for the S&P 500, dude. That's insane in a year, right? That's actually insane, right? And that is just a consequence of the money printer that the government owns, right? Not ours. That's just Jerome Powell and his buddies just friggin' printing that stuff, you know what I mean? But let's talk about the structure here. Okay, so you're actually in a little bit of a spot here. The reason being, you have what's called a rising wedge pattern going on here. Okay, so you can top it from this peak here, and you want to try and touch as many parts of the chart as you can, right? So the more touches you get, the more valid the trend line is, right? If I only, let's say I went to the bottom here and just put this all the way up to here, right? I mean, it's only here and here. It's not really as strong of an argument as having the wedge down here that touches multiple spots. And that's how you can also tell that it has fallen out, right? So here you go. The wedge starts off wide and gets narrower as it goes up. Now, if this was going the other direction, right? Let's say it was going down this way. Let's say it was going like that. Down at this point, you could expect price to probably reverse to the upside, right? As it gets closer to what's called the apex. Okay? Which is the point. That is where you often see price start to reverse. So the tighter it gets, the more likely price is ready to reverse. Now, as far as the S&P is concerned, you didn't really have a bearish divergence or anything, at least locally right here. You did have it coming all the way up to about August 16th, but ultimately you've started getting to the point of the rising wedge, and now you're selling off, right? And I've already plotted the lines here, but you can see where the support and resistance is. July 19th of this year, notice has that dip. That is a valid support line because it also touched back here on May 7th, right? So that's where I'm expecting the S&P to go before it starts finding some support. You don't have any kind of, you do kind of have some Class A bullish divergence going on here, right? Which is a reversal indicator, but it's not strong, right? I mean, it's part of the structure almost there. So the RSI looks a little better. Slight. Okay, so, but you've fallen out of the wedge. So on the way back up, you're probably going to regard that as resistance, the bottom here, this demand line. But yeah, so you've fallen out, you're heading down here. Hopefully you can find some support. Maybe it looks a little better for you on the 4 hour. A little bit. So you actually do have some Class A bullish divergence going on. It's this, right? So higher lows on the MACD, right? Less amounts of negative momentum. You also have it on the RSI. Look at that line. Right? Okay. So you do have some you've got some Class A bullish divergence happening, reversal indicator at historical support, right? And again, I mean this whole run has just been, the Fed's just printing money and funneling it into the economy, and it's yeah. So this thing eventually needs to reverse, but who the hell knows when, man? That money printer is large, and they can seemingly turn it on whenever the hell they want. But yeah, you have fallen out of the wedge, so that is significant. Probably heading back here before catching some support. You've got a little bit of divergence on the 4 hour, so maybe you do rally here, start to move back up towards this peak, which will now act as resistance, right? If you reject from there and form like a double top kind of scenario, then maybe it's downtime. But again, we'll see in time. All right, that's the S&P 500 though, and that's the overall health of the market, right? We could even take a look at QQQ, which is essentially just the NASDAQ, all right? They're pretty much the same thing. It's like the health of the tech sector, and it's very similar, right? And I mean, the reason being is that some of the companies in the S&P 500 are also in the NASDAQ QQQ. It's just this is the top 100, and which is made up of even more of the tech companies like Apple and those guys, right? There's other 400 aren't even a factor in this. So most of the top companies are tech companies. They make that much money. All right. So yeah, again, falling out of the wedge. Now, I don't know if you were paying attention and remembered from Ethereum, but this ABCD pattern, right? And what you can kind of do with this to try and project good levels to buy the asset is to just do it before the price even gets there. Okay, so we're starting at a low here, because again, remember, this is a Fibonacci extension. So if you go like that, you'll see the 618 is right around here, right? Right down around here. I put it here because it's at the support line of these two peaks from April. So that's where you can expect to start to see this asset move, right? So still considered valid. It doesn't have to hit perfectly on the 618, Typically, you get like a 3% move in either direction for it to still be valid. But yeah, so this is shaping up to get down to the 618. The 618 alone being a very strong reversal point at historical support, right? And then possibly moving on to extend to D to complete the bearish ABCD pattern. But if it did get down to this point at the 618 and started showing some, let's say, Class A bullish divergence, right? Like a move to the upside. Oh my God, I would buy that. I'd be buying that all day long. All right. Now, this stuff isn't really a swing trader's mojo, right?
Right.
Because it's not really that volatile. It doesn't move too much. It moves, 2% a day. That's a lot, honestly, for the QQQ. Because again, this is made up of people's retirement portfolios, stuff like that. But this is just an example of how you can apply technical analysis to this thing to make sense of what's going on and to see high value areas like C, no pun intended, right down here. You could literally just have a buy order set there and just put the stop right below here at 33708, right? Because if your plan fails and it falls below this peak, right, you're probably going down to the next one. But to stop that from happening, your stop order would sell automatically and you wouldn't have to worry, right? But that's where you could see where you could place your stop even. And if it does fill here, guess what? You just bought QQQ at an extremely good area. You bought it 61% off, all right, of the high. That's where you want to buy this stuff, not up here, okay? And you can see, this is a good example of bearish divergence, actually. Nick, what are you laughing at, dude? Huh? What's so funny? But yeah, let's take a look at the top here, right? Because we're on the 4 hour still. So let's take a look at the 4 hour here. Now, here's what you'll see. And we want to look at these green islands back here. So pay attention to this, okay? All 4 of you now. I don't know who left, but you're going to miss out on some good info here. This peak right here, this high, right? Notice how much green you had. Now, notice how you had a higher high, but with less amounts, right? You had lower levels of positive momentum. That is what is called Class A bearish divergence. Means weakening of buy orders, right? There's not as many people buying the asset up here as there were back here, okay? Because there were at this swing high, all right? So ultimately, that's a reversal signal. That would give you an implication not to buy the asset here, okay? Because it's showing signs of reversing. So that's just another example of things that will show you that it's maybe not a great time to buy the asset, right? But down here, if you start getting the opposite at the 618, right, at points of support, showing bullish divergence, that's what you want to do. Okay. And again, there's a lot of terms, stuff that never heard before, but with time, it will come, and you'll be trading like a god in no time. All right. So yeah, this is, I don't really think there's any more people coming in here. I really just want to kind of do this to see how this looked. I haven't seen the live chat yet or whatever, so I wanted to see what that was looking like. And yeah, man, so it looks like it works. So I think I'm going to go ahead, cut it off here, get this thing, improve where I can. Dog is barking. And keep it moving from here, man. First stream, it was legendary. There's only 4 people, but dude, I'll remember it for the rest of my life. All right, guys.